Good evening, friends. Thank you for joining me so late on a Sunday evening. My name is Vijay, and I've been around the market since 1991. So you can call me an old bandicoot because I've been hurt many times, but somehow I managed to survive and uh, thrive in the markets. Uh, so I love facts and figures. I generally, if you've observed my tweets or my threads, you would see that I don't make, what shall I say, spectacular kind of predictions. I go by mostly history and my experience of these 30 years. So this time too, I thought I should concentrate on what my strengths are, which is history, and see what path we can draw for us to navigate. So this session is not a scary session or a session where people should get scared. I have been an investor for 30 years as well as a trader. I still hold my investments. So what I can only assure you is that I am just giving you perspective. I don't intend to give any bombastic projections. So if anybody looking for some very bearish kind of scenarios and all that, then you may be slightly disappointed. But if the facts show some bearishness, then maybe it may align with your way of thinking. So there is some solace for the bulls also in my talk. Typically, I speak for about 25 to 30 minutes and then open it up for discussion. I do have a moderator all the time. Abhishek, who's my very close friend, said he will join in a little later. So till that time, I will take charge. So what are we going to talk about today is the title itself, Sell in May and Go Away, which is an old adage. That is one. The second, we are going to examine whether that is true. The second is the recent pronouncement by our finance minister, where she said FIs are not important, retailers are much more important. So that's the second part. The third part is corporate debt versus sovereign debt. A few minutes on that. Then, what are the global macro indicators telling me? That is the fourth part. And then the fifth is what to avoid. And finally, what should we do thereof? So I always like to look at solutions. There is a problem. If there is a problem, if you have identified the problem, we have defined the problem, and then you look for solutions. So the final point for me is very important. That is the takeaway which somebody who's listening to me should look forward, because okay, all this is fine. So what do we do next? So that is how the format will be. And as I said, it will be about 25 to 30 minutes. So this perspective will be from where we stand today. Mostly macro themes. I will not concentrate on any specific stocks per se, but certainly talk about any specific groups where necessary, even my Q&A. There'll be no stock recommendations, unfortunately. So kindly don't ask me for any investment advice. What I have done, I can share with you in a transparent manner. So having said all this, let us dive straight away into this topic. Sell in May and go away. Now, this adage, sell in May and go away, is about a 70-year-old adage in the global markets. It is basically coming out of the Western markets because they have this holidays which is after May. So typically people used to sell just before the holidays and then go on holidays and plan to buy it around what you call the Halloween. Halloween is October end. October 30th is the Halloween day. So it's also called the Halloween indicator. So this adage is about 70 years old, and there is some history behind it. And there is a lot of research done on this. So a lot of researchers have found that in the global market, specifically Western markets, that there has been a difference of about 10% if you actually sell in May and you come back on November 1st, and buy back the same shares, you may get it 10% cheaper on average. So averages mean nothing because sometimes the market, it depends only on what kind of markets there. There have been studies done since 1950, and Europe is the one where they have found this adage to work very well. Other developed markets like US, Japan, and UK also have been analyzed, and they have gone about uh, let's say, concluding to some extent that there is some sense in this theory of sell in May and go away. Now, what did I do? I said, okay, is it applicable to India? So I went through the last 20 years from 2000. From 2000, I went through this data, which is from 2000 May to 2000 November, that is October end. Similarly, up till last year. So we are now sitting on May 1st. So can we conclude anything from the data which we have observed over the last 21 years? So let me tell you something very interesting came about when I went through the data. Now, of these 21 years, there have been six times when the old adage of sell in May and go away has worked, where the markets have come down. Six times they have come down between May and October end, or May and November. And the other 15 times, they have obviously gone up. So very rarely we have had any sideways market between May and November. Now, which are these six times when it has happened? In 2000, it fell down by 23%. Just a minute, please. Let me have some water. Yeah. I was out of town. I came rushing in and I thought, let me start as soon as possible. Anyway, so in 2000, we had a drop of 23%. In 2001, we had a drop of 19. 2002, we had a drop of 19 again. 2008, we had a drop of 58%, which was the biggest. And then 2011, we had a drop of 18. And the last one, which is 2015, we had a drop of 8%. Now, if you look at these 6 years, any discerning individual who has studied these markets will know that all these 6 years, these were the bearish years. There was a raging bear market going on. In the other 15 years, there was no such raging bear market, and all of them, those years have produced a positive return. Now, the question which we need to ask is, are we in a bull market correction or are we in a bear market? If you think you are in a bear market, then you should expect a significant drop between now and November. However, if you think you are in a bull market, or this correction being only a bull market correction, then you should be prepared to buy from tomorrow, because this May 1st gives you a fantastic opportunity for you to buy leading up to October 31st. So the decision has to be taken by the individual. In what way does he look at the market? I have been very clear for nearly about 7-8 months. I've also put it in my Twitter timeline, and the pinned tweet talks about me favoring on the bearish side of a 20 to 30% drop by the end of the year, and probably by Deepavali, which is somewhat close to your Halloween indicator. October 24th, I think, is Deepavali. So I am leaning on the bearish side. It doesn't mean that you have to lean like what I am doing. I could be wrong, is what your hypothesis, sorry, your analysis could be. And I've been wrong enough number of times. But I am taking my view based on not this, but on what has happened since April of 2021. And I have made my views very clear, consistent, and with data. So this is the data. So you decide what you want to do. That is the first part. The second part is, are FIIs relevant or not relevant? Now, Madam Finance Minister the other day mentioned that FIs have been selling, and it has been absorbed by the DIIs as well as the retailers, as well as the sorry, as well as the people who are non-retailers, but they could be AIFs and PMSs. A lot of analysts and strategists agreed that surely this time is different because FIs have sold plentifully between October 21 and April 22. The index has moved hardly 450 points on the downside. So if you really look at the graphs, the index was 17,557 or in October approximately when they started selling. And as we speak, yesterday it was around 17,100, drop of 450 points. The next sale of about 2,70,000 crores. Humongous, highest ever in the history. So what are we worried about? We have been able to withstand about 8 months of consistent selling by the FIIs, net sell. So is there any precedence to this? So I went back in history and found out that in October 2007, FII started selling, October 2007. At that time, the Nifty was about 5,300. They sold October, November, December, January. These 4 months, even though they sold incrementally every single month, the Nifty went up to reach a level of 6,300, about 1,000 points. About 20% it went up over those 4 months when FII selling continued month after month. Subsequently, there was a sharp crash and the market bounced back because there was heavy investor buying from the domestics plus retailers. So when you look back at April 2008, almost a similar time period, the Nifty was at 5,300. So we had about 3 plus 4, 7 months of consistent selling, yet the Nifty never moved per se in terms of, okay, it did go up to 6,300, it fell to 4,400, but the mean or the median or the mode, whatever you may call it, was sitting at 5,300. So similarly, questions were raised at that point of time too, because I was very active in 2008. I was active since 1991. So I remember it like yesterday. And so this same argument was put forward, not by the finance minister, obviously, by people in the market, that we have crossed the threshold where we need to get afraid of FIIs. FIIs don't mean a thing as far as selling is concerned. As far as buying is concerned, yes, when they buy and we make money. But when they sell, we still buy and we don't lose money. So the amount of money which FIIs sold was about 66,000 crores. Now, 66,000 crores compared to 2,70,000 crores may look much smaller, but you will also have to keep in mind that the Nifty then was about the Nifty now is about 3.3 times higher. So if you simply a rough and ready reckoner, if you take a rough and ready, I am not going to be very precise here, but a rough and ready reckoner should be that it's equivalent to about 2.25 lakh crores selling. So it's as if they sold 2.25 lakh crores then, yet the Nifty never moved. They sold about 2.7 lakh crores now. Nifty has moved down by 450 points. Hardly anything in the scheme of things. So should we be worried at all, or should we not be worried? Then I just went ahead and saw what happened between May 2008 and November 2008. FIs continued to sell. Additionally, they sold about another 58,000 crores. So in that 7-8 months, between October 7 and 8, they sold 66. Subsequently, from May to November, they sold 58. But this 58,000 crores brought the Nifty down by 58%. 58%. So the cumulative selling of October 2007 till November 2008 brought the Nifty down from 5,300 to about 2,250. It went up to 6,350, came down to 4,450, was steady at 5,300 for a long time, then came down, because of inflationary factors in June in India. And then you see it collapsed in October 2008. In terms of pure numbers, this 58,000 crores had a greater impact on the Nifty between May 2008 and October 2008, whereas the 66,000 crores didn't seem to have any kind of impact. So, just a minute, Abhishek has joined in. I'll just make him the whatever, I don't know. Okay, anyway, I will come back to Abhishek a little later. So basically, the incremental 58,000 crores brought the market down by 58%. So one has to be a little careful in saying, okay, FIs have done this, we have not gone anywhere. So if FIs still continue to sell, we will still not go anywhere. Having experienced 2008, I would be very cautious on a personal level. Now, it may just happen that FIs may start buying next week and next month, and everything may become hunky-dory, everything may become okay, and then that whole scenario may change. But I'm just placing in front of you this data as to what happened in the past. You need to take a call on what is the probability of this market going up, sideways, or down. Now let's talk about third point, which is the corporate debt versus sovereign debt. We have heard many times that sovereign debt is what is causing these bear markets or recessions. There have been studies done, and I have shared one such interview on my timeline, Twitter timeline, where the person Cross-Border Capital, there is a company, Cross-Border Capital Research. The head of that is supposed to be a person who is a what I would say a doyen in researching capital flows. So he says that it is not sovereign debt which causes recessions or which causes markets to fluctuate violently and more on the downside. It is corporate debt. So he has studied it over a period of time, and he comes to the conclusion that one should look more at the corporate debt to GDP ratio, rather than the sovereign debt to GDP ratio. So according to him, there is about $300 trillion debt. You can have a look at that interview. Sorry. You have to have a look at that interview where he said there is a $300 trillion debt which is floating in the market, and a typical average of the maturity is about 5 years. So he says $60 trillion of debt has to be refinanced every year. So he says the economic crisis is not caused by debt alone, and it is not caused by financing problem. It is more of a refinancing problem. So it says every year on average, you have to refinance $60 trillion of debt. And if the Fed is going to do quantitative tightening, and one by one, the central bankers are tightening liquidity, then who will finance this $60 trillion? This will tell in the next 20 months is what he talks about. He talks about 20 months. It could be earlier. I think it is a fascinating interview. It is for a long period, for 1 hour. But I would strongly suggest that you have a look at it, because this will open your eyes. At least it opened mine as far as the debt. I used to worry about sovereign debt. He talks of corporate debt. So refinancing is going to be the problem, not financing. When you talk of refinancing, just think of the groups in India, for instance, who have financed their debt, who have built their house on debt. Now, we don't know whether they have built it purely from Indian debt, that is from the Indian banks' debt, whether PSU banks, private sector banks, or they have borrowed outside. Now, I have not done any deep research on this, but I know only one thing. One number, popped up, which was of a particular group, which the value of the debt today is equivalent to the GST number today. 1,68,000 crores, I think, is the collection today. This group has got a debt of lakh and 68,000 crores. I know, yeah, I'm sure you all know which group I'm talking about. And there are a lot of people who were shorting this group shares and coming a cropper simply because they have not studied that the group, the management owns about 74% of the floating stock in most of the companies in that group, the 5 to 6 companies. So I personally will never short a company where the management owns 74% and the associates may own another 10%. So there is no floating stock. So to try to short a stock or a group because the prices, the what PE ratios are 1,000 and 500 and all that, I think it's a fool's errand in that sense that you may win finally, but the cost of shorting may be very high. But what I'm trying to bring here is not whether we should short that group or not, but groups like this who have taken humongous amount of debt will find it difficult to refinance. Now, this refinancing, we may think it is not limit, nothing concerned to India, but in the 2008 crisis, India fell more than global markets because refinancing is a part and parcel, and we are linked to the global financial market, whether we like it or not. We are talking of financial institutions, banks, NBFCs. So this is something one needs to be very, very worried about and wary of it about when refinancing is there. Who are the people who need refinancing? So if you do a little bit of study, you will get to know that people who have taken extraordinary debt will require refinancing one day or another. And that refinancing, when it comes up, they may have to pay higher rates of interest. When you pay higher rates of interest, then the entire structure will be questioned. So that is a point which one needs to consider. Then the fourth point is global macro indicators. Now, many of us are not so concerned about the global macro indicators because most of the time, since 2009, global macro indicators have been in a very steady trend. There has been no big fluctuations. Even if they are there, they have been for a very short span of time. So, therefore, we have not bothered about global macro indicators. For instance, something like DXY, the dollar index. None of us have bothered about what is happening. So we always think it is around 85, $90. At best, it can go to 95. So today we are staring at 100 plus. So there were a lot of strategists who said it will never go to 100. It will go to 85. Very big, very successful, highly popular following they have. I am not interested in naming the names here, but what I'm trying to get at is that people who have experience, who are successful, have got it wrong because today it is trading at 103. So when it is trading here, then there is a cause for concern because the last time it traded here was in a panic high, which was on March 2020. You will agree that we are not in any panic situation as far as we are concerned financially vis-a-vis 2020. But it is like slow poison. It has moved above those levels also. So that is one thing one needs to really look at it. The second is the 10-year yield. Now, 10-year yield, we are looking at not only India, globally. Globally, 10-year yields have started inching up slowly and steadily. While US 10-year yield is touching 3, the most interesting part is the European 10-year yield, especially Germany, which was in negative, has now gone close to 1%. Now, from when you have negative yields for about 7 years, from 2015 to 2021, you had huge amount of negative yielding debt all over the world.
There seems to be connectivity issue.
Yeah. Sorry, I think I got thrown out. This is one small crash which happened. Uh, Abhishek, can you hear me?
Yes,
Yeah.
sir. Yes,
Okay.
sir. You're back.
So now this negative yielding debt, which a lot of companies utilized it, today when they need to refinance it, they will have to have, pay, pay a positive yield. So their calculations are going to be challenged. So what we saw negative yields, they're no longer there and probably they will never come back. So this is one very important thing which one needs to consider. Then the final point, which a final point to consider there in the global macro is the inflation. Inflation globally, we have seen it is there across all commodities. Mostly, it was there in the the iron and steel. Then we are talking of inflation in oil. Today, we are having inflation across the board. So I do not know when and how the inflation is going to come down. As far as I can see, inflation is going to be very sticky. Now, rate of change may come down, but I don't want to talk about how much oil will go. But if I look at an oil chart, it tells me that every time the bears have been very active on the oil chart, between 108 to 110 to they drop it to 100 or below 100 for a very brief span, it bounces back. So it's very volatile in a range. Normally, if you look at that chart as a technical analyst, you will notice that it is taking support at say $97. If it breaks $97, obviously there must be some good reasons for it. If it breaks 112, then there must be obviously some bad scenario which may be there, which may take oil to significantly higher levels. I'm not talking of any number here, but if you look at the chart as a chartist, it tells you 97 and below is good news for the economy, for the world, and for the markets. Above 112 is certainly bad news. So that is one thing which is hitting me in the face for quite some time. When I made a prediction that we will drop by 20 to 30% this year, I had made this in September, October, and I wrote it in my yearly predictions of 2022 on December 29th. There was no Ukraine. But when I said 20 to 30%, it is simply because we had bear markets after a humongous bull market where the markets have dropped 20 to 30% over a 14 to 15, between 12 and 14 months. So what I predicted then and I'm predicting now is that we are going to have, whether you call it a cyclical bear market or name it in any manner, a normal plain vanilla bear market, which should take us down 20 to 30% from the all-time highs, which I assume have been hit on October 19th of 2021. So what should we avoid? Now, this the last 2 points. What should we avoid? I have believed and have put it again in my pinned tweet that you should avoid stocks which are having PE of more than 50, PEG greater than 3, and which have trebled within the last 1 year. Though it may not be a very good indicator of saying what if the market has discovered the stock. So can you just say just because the price has gone up, should you short it or should you get out of it? Because there have been stocks which have gone up 5-10 times and they still maintain that. I'm saying these are warning signals. There is no definitive way of analyzing it and saying that this sector should or this stock should be sold because it has gone up 3 times. But this is how I look at it. I definitely am very scared of the popular sectors or the sectors where the strategists tell us to hide. Again, I have specifically mentioned the IT sector will do very badly this year. This I mentioned it in January. And touchwood, for whatever it is worth, it seems to be working that way. So I have my own proprietary indicators which told me that IT will be the worst performing, one of the worst performing, when it was the best performing on that day when I made that analysis. So I assume that the bear market will end only when the IT sector bottoms out. And as of now, I am not able to see it. So finally, okay, these are the, let's say, not so good things. So what am I doing? I had portfolio called the Ugly Ducklings portfolio, which I structured it in July end of 2021. And personally, in my portfolio, I hold ITC and Yes Bank. These are probably the worst, the most hated stocks. But I continue to hold ITC and Yes Bank. I have not added anything in both of these stocks in my family portfolio since February, when I had made a mention about this in my clubhouse. So I have just done what we call jobbing. I've kept adequate stop losses, but I still hold both of them. And I've added in my ugly duckling portfolio gold and silver, because I think gold and silver, I was thinking that in the second half of this year, gold and silver will perform. So instead of keeping it in cash, I moved all cash into gold and silver. So I had created a 15 stock portfolio with 1 lakh for each of the stocks. So wherever the profits were there, we booked the profits, and hypothetically, we have shifted to gold and silver. So a lot of people have used that as a template. Out of that, I have only taken 2, and I continue to hold gold and silver also, independent of that portfolio. And my mentees do hold quite a few of the stocks which are there in the 15 stock portfolio. So right now, I would like to close it here. I'm open to discussions. I would love to have a counterpoint, and my word is not final, obviously, but I hold my what shall I say views based on facts. So this is where we are. Abhishek, will you be able to just moderate from here, please? Thank you.
Yeah,
Thank
sir.
you for
Just
hearing.
make me the co-host,
So,
and let's just Sanjeev, can you
yeah,
just mute your mic, please?
good evening. Can you hear me? Hello.
Yes, we can. Go
So,
ahead.
I just want to understand something. Previously, say 10, 20 years back, when F2s were operative in the market, they had about 85, 95% share of market operation. But today, the latest research says that their weightage in the market has shrunk to less than 28%, and along with DIIs, they are less than 40%. Now, the speaker said that, and good correlations he made with dollar falling, then oil prices, and other factors. I appreciate that. But I want to understand, if the F2 weightage is so less, then how their withdrawing from the markets affect, apart from liquidity, affect the falling prices of the bear market and the bull market?
Yeah, Sanjeev, thanks for the question. Simply, I do not know from where you got the number of that they held 85%, and now they've come to 26%. As far as I know, they never held that kind of numbers which you are talking about. I will be very happy to be proven wrong. So I would like to, let's say, get that number. As far as my data goes, I don't have it right now, but whatever data I have, whatever data I've seen, is that they only increased their holdings in the Indian capital market over the last 94 they came in. So 6 plus 28 years net, they have been only increasing, excepting maybe a couple of years, maybe in 2008 and maybe 2021 they have reduced. But overall, if you look at over a 21 plus 22 plus 6, 28 years, it has been only net positive. So I really don't know from where the data
Yeah,
has come.
I
So therefore,
I'll just
if you have the
interrupt, please.
data,
May I interrupt? You see, I'm not talking about the increase of the size of the portfolio. Hello. I'm talking about what is the market operation weightage of F2s then, 30 years back, mostly were operated by F2s. There was hardly any Indian retail participation. Today, that weightage has come down from 80-85% to.
yeah. So sorry, I'll interrupt
Yeah,
here.
yeah.
Sorry, I got your point. I know you're making. I want you to give me that data. There is no such data.
Okay.
Even you are talking of 85% were there in. See, I've been there since before FIS came. FIS came in
Hmm.
'94. I've been here since
Hmm.
'91, and I study data.
Hmm.
Forget about what other things. So there is no such data that FIS were ruling the market. FIS have never ruled the market in terms of the kind of numbers which you are talking of. It is not there.
Okay.
If it is, if you got some data, I'll be very happy to review
try.
it. I'll be very happy. Yeah.
Yeah. So the correlation between F2 moving out and the current market situation.
Yeah. What about it?
I want to know how it is affecting when they are only having 20% of holdings in direct companies and 40% of free float holdings, which according to Fortune India you will get an article there. Then how does it affect the Indian stock market whether they are withdrawing or pumping in money?
You are seeing the effect, no?
But
You're seeing the
we're
effect.
seeing it, but really how does it work? Because something I'm trying to figure out the psychology of the market, that what really is driving down the market.
Okay. See, Sanjeev, this is a very
Right.
qualitative thing which we maybe want to discuss for, maybe we'll discuss for hours and maybe we'll never get an answer to
Okay.
that. I am going by facts. I am going by numbers. Numbers tell me this is what has happened in the past, this is what has happened now, and this is what can happen and may happen. And their counter will be, it may not happen. So I'm just placing this, so final decision has to be taken by somebody who is investing or not investing. So tomorrow morning, for instance, most people are scared that something bad will happen. But I have seen when Lehman Brothers fell, in 3 days' time, the Indian market went up by 13%, 1-3. So imagine worst thing which we talk about in 2008. If you talk to somebody, what happened in 2008, people talk of Lehman Brothers, but people don't know that after Lehman Brothers, within 3 days the market went up by 13%. Now you may give reasons why it went up. So I'm saying, for all I know, it may open low tomorrow and close higher also. I couldn't care less on that. But I only know one thing, that this kind of pattern tells me that I should be more wary of the market on the upside than to, just blindly believe that nothing bad will happen. I'm not saying bad. Actually, bear markets are the best time for investors. So I'm looking forward to buying more in this year. So it doesn't matter to me, but I'm just saying that data tells me that things are not hunky dory. That's about all. For me, it tells me. It tells exactly opposite to somebody else.
Okay, one more point.
Yeah.
One speaker I heard, he was saying that whenever bond yields go up in US, the markets go down because it signals that people are scared of the equity markets, therefore they are buying bonds. What is your view on this?
See, normally bonds and equities are supposed to go in different directions. There should be correlation. There should be negative correlation. But in this market, in the last few years, when rampant money printing has happened, all the correlations have gone. It has gone. What shall I say? Helter skelter. Today, you are seeing the bond prices are down, equity prices are also down. In my opinion, the last 14 years of what shall I say, unprecedented money printing has created a scenario where things can get ugly if they don't get better in the next 2-3 months. So you will see bonds prices may go down, equity prices may go down, and the commodity prices may go up. And these kind of what we used to historically talk about, that there is some correlation or an inverse correlation, in my opinion, have stopped working. Not my opinion, sorry, facts have shown that it stopped working. And in my opinion, they are unlikely to go back to what they were. So I think we are in a situation where we need to be very wary, be alert, and look at it every day, and then take a call. I have told you what I have done, and I have told you what I think also. So I couldn't be more clearer than that.
Thank you so much. Thank you very much.
Yeah, thanks,
Yeah.
Sanjeev. Thank you. Abhishek?
I just wanted to give one counter on that regarding regards to FII selling, what Sanjeev has been mentioning. FII selling has been going all around in the last couple of months, but just that you've not been able to notice it because of Reliance. That's the only counter that's been taking the market up. And if you look at that in that way, then rest of the entire market, including financials or including your metals or auto, quite a bit of selling has happened, but it's not visible to the unkeen eye, I would say rather. So that is something you have to take care of, and it's been happening a lot. I've been watching it.
Yeah, Abhishek, thanks for that.
that's
Yeah,
confirmed.
so maybe we'll ask others, somebody who would like to join,
Yeah, sir.
if somebody is interested.
So can you speak to the co-host?
Yeah, you want me to make you a co-host, is it? Okay. How does it work? What do I do?
The button, sir, beside the leave button.
Yeah. Oh, okay, I have done
Go
that.
ahead.
Okay.
Yeah, go ahead.
So if no one is there, may I ask stock specific questions?
No, there are quite a few people.
Okay.
So, Sanjeev, I appreciate your motive, but I generally don't want to answer stock-specific questions.
Oh,
I can give you a roundabout answer, but I will try to answer it little later. We'll come back. I'll come back.
thank you, sir.
Okay, so we've got Prakash Bajpayee. You can go ahead first.
Yeah, hello.
Sanjeev, could you mute your mic, please? I'll be grateful. Thanks, Sanjeev.
Yeah, very good evening. So, I have been
Good evening.
following all your messages and tweets quite regularly. So, just one question or one doubt I have in my mind that yes, you are right that many of these macros are very deteriorating quite fast, like DXY, commodities, and such things. But what do you say that say a lot of it is because of this Russia-Ukraine factor? Had there not been a Ukraine war, the dollar would not have risen that way because the euro will not fall in the same way. Similarly, the commodities rise, especially this something like metal, aluminium, and oil. They just went exponential, also because of the war in Russia, Ukraine, Russia. Same is the story for grains like wheat or edible oils. Now, suppose in 10 days or 15 days this war ends. So, won't this all these things will reverse?
Yeah, that is the what shall I say, $1 million question, isn't it? That if the war ends and yeah, all when peace breaks out, I had actually written a Twitter thread called "If Peace Breaks Out." So it's possible, right? So what do we do right now? We have this information available to us. Now, we don't have something saying that if this had not happened, this would have happened. Or if this has happened, this has happened. So we have to face the facts. Based on the facts, this is what we need to take decisions. Now, luckily, we can always reverse our decisions. So there is no such rule that you take one decision and you just go by only whatever you think what you thought today will be happening tomorrow. That's why I said that you need to review it on a daily basis. Be wary of it. WARY, not WEARY, which we are all of us now. We need not be. So I feel if see you have put a big if. So if it doesn't happen, if peace breaks out, yes, of course the markets may reverse. That's why your $97 is your stop loss. No, otherwise there should have been no stop loss. You should have kept on buying oil, for instance. So there's stop loss for everything. So we need to understand that things can change. Inflation can come down. There's also another argument that you see sanctions which have been put on Russia may not be lifted even if the war ends tomorrow, because sanctions in the past, when they have been put on various countries, have not been lifted for years, maybe decades. So if you take that argument, even if the war ends tomorrow, I actually at one point of time thought it will end before May 9th, because May 9th is the Victory Day parade. So I thought it will end before that. Unfortunately, it doesn't seem to be. So I had planned even for that if it ends before May 9th, what am I going to do? I'm going to look at the prices. The price, what it's going to tell me, I will act on it. Let that event happen. Let the price show. See, the markets have been there through thick and thin. We have seen all kinds of issues in the market. So why should I, worry about if this happens, that will happen? What is happening now? What should I do? I think one should be very, very careful at this point of time, according to me.
Mhm. This
Yeah.
is one. And another point is that, of course, this is more on a qualitative thing that how do you feel about these changes which are happening regularly on the F&O front? regulatory changes, I mean. Say
Sorry,
earlier
what
there
did you say?
was,
Yeah.
yeah, I'm saying that qualitatively, how this regulatory changes on the F&O front, how they are likely to impact the market trading. You have some views on that?
Yeah, see, more regulation. See, unfortunately, in India, I have been an intermediary since '91. I've seen the more regulations, the more they, crimp the freedom. When you crimp the freedom in a bear market, it generally is bad for the market. So, in my opinion, this is a bear market. So, if you have regulatory changes which are not going to, which are going to crimp the freedom, then I expect markets to go up will have that much more trouble. That it's an added load on the market to go up. It's not good, but that's I'm not SEBI.
No, but for example, like this rule which will come from tomorrow that everyone has to have 50% cash at the client level for the margin. So could it lead to more selling of the cash stocks?
See, more than see, I have been votary of this thing. Markets don't move on fundamentals really. The most important thing for markets to move is liquidity. If you're going to crimp liquidity, then
Hmm.
obviously what will happen is the markets will are more likely to come down. And for markets to come down, you don't require selling. See, most people think markets will come down because selling is there. You just need lack of buyers.
Yeah,
Tomorrow, if
that's
the buyer says, "Boss, this is very tough. This market, I don't want to come," then automatically the prices will seek lower levels. I think this fundamental truth of market people do not. I mean, may not put much attention to that. I put a lot of attention first to liquidity. Second is to what is called the buyer's remorse. When the buyers are saying, "Boss, I don't want to be in the market," whom will the seller sell to? And even if he wants to sell to, at what prices will he sell to? He will always obviously sell it at lower prices. This happens in real estate. This happens in any asset class. It will happen so in equity also.
yeah. Basically, market volume will drop down so poor that it will be impossible to sell or to.
Yeah,
Uh,
you got the point. You're
mm,
Anish, you want to say something?
I nothing different, yeah. I mean, just like I just joined, and I think around that same time the glitch happened. So I didn't know what you guys were discussing. I think you guys were discussing about the margin and all of that. So I'm not very. I mean, I don't have a very strong view about the microstructure of the market on that level. So yeah, I mean, there could be a liquidity. You know, I mean, LIC IPO is coming. This I think I just saw a message from somewhere. I don't know if it's confirmed or not. On some group I saw that they have deferred this to June now. I don't know if it's true or not. So
Uh-huh. Why would they do that? Because it's already on. No, tomorrow is the anchor book is opening tomorrow.
no,
It's too
no,
late to
not the
defer it.
LIC
No.
IPO. The margin issue. The margin thing.
Oh, margin issue is possible. Margin issue is possible that they'll defer
Yeah.
it.
No,
Very
LIC
likely.
will go ahead LIC will go ahead. So with all of that, and anyway, I think fourth of May we will see how strong the Fed is in its resolve to kill inflation. I think they sort of, like I said, the market is running ahead of it for the first time in a few years, and I think this time it's high time that they sort of take some pain and sort of address this issue for the timing. Otherwise, it will get really troublesome for them. And I mean, one thing that I mean, when the GDP print came out, so a lot of I mean, the narrative started that it's minus 1.1, but it's okay. The underlying internals of the economy are very strong. People are spending, and it's only because there were more imports than there were exports. But what if there were more imports than there are exports? That means the jobs that you're creating are not in the right sector, right? If you have to, and I mean, your consumers are spending, and your economy contracted because you had to import a lot of that stuff. I mean, there's some problem somewhere. So it's not that you can just get away by saying it's technical. So that narrative is building up somewhere, that the economy is strong and they want it to. I mean, And even if you have midterms now and all of that, I don't think they are in a situation to. I mean, the focus will be on inflation. Is my take. If they're not, then for the I think bigger mess that they will create for themselves. Yeah, that's all.
Thanks, Anish. Thanks a lot for your views. As usual, very precise. Sharad sir, Sharad
Sharad
bhai.
sir, please go ahead, sir. We were at Dixon.
No, I was saying this ASM net framework is very necessary because in illiquid stocks, people park the shares and make the OI so high. There is no volume, which is detrimental to the exchange. And another thing is, I'm totally against this shares been accepted as margin here. What if I put Tata Power shares and buy Tata Power futures, and if they drop by 20-30%, then Tata Power shares will also go and futures will go. Where is the margin left? So world over, no shares are accepted as margin. Okay, only cash. And in our exchange, 15 or the VAR margin applicable in the cash market should be applicable in the futures market for intraday. 10%, 12%. What is this 25% for intraday? For what? So because the OI is very high. Why the OI is very high? Because everyone is parking the shares. Futures market are not for parking. It is only in India that people use futures market to park and to go long. Futures markets are supposedly to go short only. But here everything is it's okay. Now on this LIC IPO, Phoenix, or any idea?
Sir, I have been, I've been talking only of liquidity as the main driver for the market. Now, when it was some 60,000 crores, I was really very scared. At 21,000 crores, I'm still scared, but not as much as 60,000. But 21,000 crores probably is coming in, 4 months later. As it is, a lot of liquidity has moved out of the system. So today's 21 is equal to say October, November 60,000 is my opinion. So this will create some more issues, I would say, for the market or the burden for the market to go up. So while I don't want to talk about the merits of the issue, LICIP issue, briefly from liquidity, I'm certainly very scared, Sharad Bhai. You know how it is, right? Liquidity is
On
what
the
drives the
same
market.
lines you said. On the same lines you said.
Yeah.
I think 5,000 crores is equal to 50,000 crores. Starting tomorrow. It's going to
That
be
is
a
correct.
difficult time. You can't imagine what will happen. 16,800, everybody is hoping will hold, ye, wo, fan, blah, blah, blah. Kuch nahi hoga. LIC is not supposed to buy one single share starting tomorrow because of IPO. So if LIC is not there, who will buy? That is the main question.
Yeah, I take your point. I take your point. See, one of the negatives I've always felt about LIC IPO is that once you go public, then you are accountable to the public to whatever extent. They can still do whatever they want to, but you are accountable. That's one point I have been thinking about. That once LIC IPO happens, then you see people will begin to question. And as you rightly said, that they may not be able to buy, they should not buy, but they may not be able, I would say maybe they'll not be able to buy in the manner which they were buying in the past. They have
no,
a equity portfolio, right?
no,
Investment portfolio, sorry.
no. After the IPO, I think our market will be screwed because LIC holds are 29% of its portfolio as equity. Okay. And IDA, that is the Insurance Regulatory and Development Authority, has suggested and implemented that only 10% has to be in equity. And LIC is the only insurance company in the whole of the world which holds 29% equity. So now whatever the government may think, do, blah, 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 but eventually, say 2, 3 years, 5 years, they will have to bring it down to 10%. Now, so much of flow of equity and no absorbent of liquidity, वो कुछ भी हो LIC में डालो, IDB आएंगे LIC में डालो, ITC LIC में डालो. So if that is not available, the market is in a very precarious condition. And this fund flow of this retail, how long will it last? It won't last forever. I am also not going to live forever. Similarly, there will be a time, 1 year or 2 years, बाद में क्या? And another thing, FIIs hold 46 lakh crore of shares. How much? 46 lakhs of. उसमें से 5% बेच दिया तो अपना बेड़ा गर्क है. So from where? See, only one thing I have been insisting. In this last 11 months or 12 months, I don't know when, Nifty was at 12,000, 13,000. तुम 11 महीने में ये 18-17 कर दिया, तागड़ दिना मचा दिया. This is not real. This is fake. And fake things don't last. Please try and understand. This is not the real market. This is a bullshitter's market. Okay, I'm wrong. Agree. Wipro 720. I'm a big bull. 510. I'm a tape. That too in a period of 4 months. How can it happen? In a bull market, how it can happen? Not Wipro, say Tech Mahindra, 1800, 1200, Infosys, वो 2000, 1500. कितना स्टॉक है? वो मारुति 4000. वो 4000 होएगा. वो थोड़ा जल्दी बोल दिया मैं. But 7600. So where is the bull market? Only Reliance. If you knock off Reliance move from 2400 to 2800, our Nifty is at 16,000. If you remove Adani and HDFC, and so please try and understand, this market is not at 17,000. For all practical purposes is much down. And believe me, from my experience, from my knowledge, from the way I play the market, and the way I play the market, nobody knows. Okay. This is a stealth bear market which is not visible to anybody. Everybody is saying either support, and nobody is saying this is not a support. Please, we are in a very, very dicey market. If Wipro can fall 40%, believe me, what else? Where is the stability? And why I'm saying Wipro? Because say take any other technologies stock. The bull market in technology, it went up to 36,000 or 37,000. And it is 30,000 or so. अरे यार वो 25,000 हो जाएगा तो क्या होएगा? वो 10, 12, 15,000 था. So please remove these 11 months of buffoonery from your mind. You will be much happy. You will be able to take proper decisions. Thank you.
Yeah, thanks, Sharad Bhai.
Absolutely agree with this.
Yeah, yeah, Abhishek, just let me
I'll go
invite
ahead.
Subhadeep
Subhadeep Nandi, sir, please,
Dada.
yeah, please.
No, before before he speaks, I really appreciate that you come to my spaces. I've been a avid follower of you for a very long time. I really appreciate the way you go about doing analysis. Hopefully, you will be able to give us some different facets. And incidentally, let me welcome Vipin Bhai, who's also come. Subhadeep Dada, the floor is yours. Subhadeep Dada, you are there? You need to unmute. Vipin Bhai, please say something. Let me say good evening to you.
I've invited him.
Okay. What's that? Maybe BK can speak. Abhishek, you take care.
Yeah, I'll do that.
Hey, 1 minute, Abhishek, just 1 minute. Let's say it crashes the next time. So what should one do?
Yeah, good evening, sir.
Good evening, Vipin Bhai.
आपका टॉपिक तो अच्छा है, सेल इन मई एंड गो अवे एंड कम बैक इन जुलाई. ये नहीं ऐड किया आपने?
नहीं सर, हमने बोलता है नवंबर, दीपावली. बाय इन दीपावली, कम बैक इन दीपावली. हमने बताया सर, why that the topic is like that. I spoke for about 20 minutes. Maybe I don't know whether it's a record.
आपका टॉपिक तो अच्छा है, सेल इन मई एंड गो अवे एंड कम बैक इन जुलाई. ये नहीं ऐड किया आपने?
नहीं सर, हमने बोलता है नवंबर, दीपावली. बाय इन दीपावली, कम बैक इन दीपावली. हमने बताया सर, why that the topic is like that. I spoke for about 20 minutes. Maybe I don't know whether it's recorded, whether the recording is available, but I mentioned this is a.
हेलो, अब
हाँ बोलिए.
सर का आवाज कट गया.
It's on you. आप बोलिए विपिन भाई.
Okay, actually I assume कि sell in May is right and it may continue to June and it may again pull back in July. It's my assumption because market is continuing a loop. Yeah, sir.
Six times only in the Indian market by selling in May and going away. One was in 2000, 2001, 2002, 2008, 2011, and 2015. I have tracked the data for 21 years. So the strange part is all the 6 years were bear markets. So if the question today is, do you want to sell and go away? If you believe it's in a bear market, you should sell and go away. If you think it's a bull market, you should buy heavily because the 15 years, the market has gone up between May and November. This is data telling you. Yeah, just go ahead, sir. Vipin Bhai.
Right, sir. But if नहीं, अगर हम ऐसे देखें कि लास्ट 2 स्विंग जिस तरीके से चले हैं, जिस तरह से क्वांटिटी आती है हर महीने की, अगर 2 क्वार्टर का देखें तो 2,20,000 करोड़ का डेटा आया था कि एफआई का. अगर ये स्पीड है तो इस स्पीड में कंटिन्यूस सेलिंग पॉसिबल नहीं है. 2-3 महीने बाद वापस फिर पागलपन जैसी रैली दिखाना चाहिए, बिकॉज क्वांटिटी जो सेलिंग की आ रही है वो बहुत ज्यादा है. और जिस तरीके से पैनिक हो जाता है, फिर इसको वापस माइंडसेट चेंज करने के लिए फिर से हरियाली दिखानी पड़ेगी. तो माइट बी कि मई एंड जून डीप ब्लड बाथ एंड जुलाई एक बड़ा रिवर्सल होगा. तो ये मई जो आपने लिखा ये तो ठीक है, मैं जरूरत से ज्यादा एक्सपेक्ट कर रहा हूँ मई में 25-30% का इन द सेम मंथ इन द मई. और
तो मैं मर जाऊंगा सर.
क्यों, कैसे सर?
नहीं ऐसे
नहीं, सिनेरियो ये है कि आपने एक 2010 को स्टडी किया था जब बुल मार्केट का जब टॉप लगा था, तो आपको याद होगा बार बार मार्केट नीचे चला जा रहा था 6300 का टॉप लगने से पहले. तो वो हुआ क्या था कि एक बार 15% की रैली हुई, उसके बाद एक बार 17% की रैली हुई, हर बार गिव अप हो रहा था। उसके बाद जब अगली बार गई तो 32% की। अगर उल्टा कर दें, यहाँ पर तो एक बार यहाँ पे 11.5% का फॉल हुआ था, दूसरी बार 14.5% का हुआ। बार बार मार्केट से नीचे से मोमेंटम आता, तो हमने कहा ठीक है, इस बार 27-28% का होना चाहिए, क्योंकि पीछे का पूरा सेलिंग अधूरा है। और वहां पर एक मेजर सपोर्ट भी बनता है। मेरे ख्याल से अगर 12,500 होल्ड होता है, और इसी में मई और जून में अगर इतना बड़ा क्रैश आ जाता है और 12,500 सपोर्ट बनता है, मोटा मोटा 13,000, तो मेरे ख्याल से बहुत अच्छा टेक्निकल बाई इसलिए आ जाएगा क्योंकि हर आदमी को ये लगेगा कि चलो कोरोना का प्री कोरोना हाई बन गया है, रिटेस्ट हो गया है, अब वापस 21,000, 22,000, 24,000 का सारे टारगेट टेक्निकल चार्ट पे जस्टिफाई करना इन्फ्लुएंसर के लिए आसान हो जाएगा। तो एक अच्छा पुल बैक 2-3 महीने के लिए फिर मिलेगा, जिसमें अच्छे से टोपी पहनाने को पूरा माहौल मिल जाएगा। तो बहुत अच्छा बेस है 12-13,000 कि जस्टिफाई करना है कि चार्ट पे एक्चुअली डिजाइन बनाना होता है ना, कि देखो यहाँ से बोला और अब यहाँ से 12 से 24 इस बार हो जाएगा। पिछली बार 7.5 से 18 गया था, तो अगली बार यहाँ से अब 10,000 और जुड़ेगा तो 22, 23, 24,000 हो जाएगा। तो बहुत अच्छा लेवल है, और आई थिंक ये मई या जून में ही मिल जाना चाहिए। मई में हो जाए तो बहुत अच्छी बात है, अच्छा पुल बैक आ जाएगा। जून जुलाई पूरा ही रहेगा पुल बैक, और अगर जून तक ये बॉटम लगता है तो जुलाई से पूरी हरियाली होगी अच्छी खासी। मुझे लगता है 12, 13, 14, 15 सब दिखेगा। मेरे पास इससे ज्यादा डेटा है नहीं सर।
Vipin bhai, that sounds very, very rosy as of now, and I would wish for all the best that scenario would play out as of now.
अभिषेक,
Yes, sir.
दो बात बोलना है कि राइट नाउ एज ऑन फ्राइडे our market cap is 269 trillion rupees and our estimated GDP is 240 trillion rupees. World over, a market cap is 50 or 60% of the nominal GDP. Here, it is above GDP market cap, and LIC IPO being added, it's way above. So according to me, 160 or 170 trillion market cap will be there 110% without any fail. That's for sure. No law of economics can change that. Whether it be Ambani or Adani, they can't change the law of economics. That's it.
Absolutely true, sir. Absolutely true. And then the scenario which Vipin also pointed out is quite possible, actually. In fact, क्योंकि अभी जो चल रहा है, it is just running on two big companies which are holding up to the market as of now. Quite a big possibility. Anyway, let's just take a look at the next speaker. I think Prashant Malik wants to speak. Please go ahead.
Yeah, I actually have a question for Senik sir. He presented the data for the index, and pretty much what he mentioned was that the sell in May and go away does not work unless you're in a bear market. So if it's not working, then I don't know what's the point of discussing this, because this is pretty much an old theory that has not been shown to have any statistical basis or any basis in reality. So
Okay, let me
why
just
are
give you a
we
counter.
why are we discussing this?
Interrupting you.
No, wait. Okay, if you finish, Prashant, I'll answer.
Yeah, so that's my first question, and then my second question is that if you are only related to a bear market, then a bear market can essentially hit the markets at any point of time, and so there's nothing special about May or June or November or December or any of these other months. So yeah, those are my two questions. That first one, if sell in May is not working, then why are we discussing it?
Thanks for that two questions, Prashant. Probably you didn't join at the beginning. I started off saying, just to summarize, I started off saying that this is the topic, sell in May and go away. From there, we will draw to 5 other topics. The other one was in terms of the FIIs are not relevant. That's the second one. The third one was corporate debt versus sovereign debt. The fourth one was global macro indicators. The fifth one was what to avoid. And the sixth was what am I doing? Okay. So this was, while the topic was sell in May and go away, we drew it from there. Now, I also brought out that sell in May and go away is a topic which has been researched since 1950, and there are enough data available. And if in the global, especially Western markets, this is what we call the Halloween indicator between May and November. It has worked more often than not, and there has been a 10 percentage point drop. So I then looked at the Indian market, because we all talk of sell in May and go away. We all talk of FIs will sell in November and go for holidays. We all talk of on weekends the bulls will sell and go away. So we need to test this hypothesis or test the adage, find out whether there is any meaning in it. So the topic was chosen, sell in May and go away. And then I did research on that. Research showed me that out of 21 years, 16 years it didn't work. 15 years it didn't work. 6 years it worked. All the 6 years were bearish years. All the 6 years, without exceptions. And in 2000, it was 23%, 2001, it was 19, 2002, it was 19, 2008, it was 58, 2011, it was 18, and 2015 was 8. Now, I completed that part, that segment, by mentioning that if you think you're in a bear market, then there is a high probability that it will drop between now and November. If you recollect, number of conversations we had at various places, I have been consistent that we are in a bear market, whereas you have been witness, like many have been, where people have tried to demolish my arguments. And if you forget about my personal arguments, if you just switch on the TV or go to any of the strategists who are there on Twitter or any other social media, none of them are talking of a bear market. None. So here I'm almost in the minority of one, which who's talking of a bear market. So I am not saying that it's a bear market which you should accept. I am saying it's a bear market which I accept. So therefore, if somebody is willing to believe that it is a bear market, then one should be prepared for a downside. Simple. So therefore, it is very essential that we discuss this, because what is happening is lot of myths are being circulated. Lot of big strategists are going around and insulting people and talking down on somebody who talks that there is a bear market. For people like me or Sharad Bhai or Vipin, we are able to see it clearly. Obviously, we are able to see something which others are not seeing. So how do I prove to somebody, or how do I present data? I have to present data saying this is the data on which I am basing it. Whereas the people who are on the other side are saying it is a bull market, India is a bull market, so it has to go up. Nobody asks those questions. The primary purpose of this space was to look at data and then come to the conclusion of your own. I'm not saying that you have to be in the camp of ours, but just look at it. That's all it is. A limited point is that data analysis. This is what I've done. Yeah, thank you.
Can I interrupt a bit on this? So I just wanted to bring up a few facts regarding the U.S. markets and what's happened in the FANG kind of stocks, which are supposed to be the flag bearer of the bull markets, which we've seen last year, 2020-21. So you've seen companies like Facebook, and you've seen companies like Amazon, which have dropped for almost towards the pandemic lows. In fact, Facebook is below the pandemic lows. So this is something which deals with discretionary spending, just for heck's sake. If you look at Netflix, what has happened in Netflix, and that is an indication of people will not do फिजूल खर्चा, as what we call it in India. जो अगर वो लोग वो नहीं करेंगे, in fact the Americans who have gotten a lot of stimulus checks and who got a lot of incentives from the government, if they're not willing to spend on necessities such as Netflix, which is necessity for them, I think there is something wrong with the economy and the kind of spending ability that people have, and this is going to get aggravated much more worstly in going forward. That's what I believe. Of course, that's just 2 cents. Thanks, anyway. Next up, I think we should take Himani. She's been waiting.
Abhishek, I would like to say one thing, Right? It was a bit rude of Prashant to ask this question.
So it's okay. It's open forum. I think they are allowed to.
Sharadji, can you elaborate on why it was rude? I'm just questioning what's in the title of the thing, right?
Yeah, it's okay,
I think it's
Sharad
okay.
bhai.
It's okay.
Let's leave it.
It's
Let's
fine.
Prashant,
Just
let's
leave it
leave
at
this
that.
now.
Yeah,
Let's leave it
I
at
mean,
This
that.
I've
I'm
answered your
not
question.
saying, yeah, I'm not saying anything related to whether you believe it's a bear market or not bear market. Each one is entitled to his own views, right?
No,
Of
that's correct,
course.
Prashant.
But
Prashant bhai, I
I
just
think it's
leave it.
important. No,
Yeah,
it's important to make clear for everybody who's listening that
100%.
this adage of sell in May and go away doesn't work, right?
Fair
I,
enough.
We'll get to
I
know.
that's the
told you it
important
works
part.
six times. I told you it works 6 times. So I've given you data, and let's leave it at that. Now it is
Yeah.
if you don't
Well,
want to take
Yeah.
that, if somebody doesn't want to take it,
no,
obviously it
no.
is there.
You have to be clear when you say it works 6 times. Out of how many times does it work 6 times?
Out of
When I
probably
said,
30,
hold
so we
on,
are
mathematics
minority.
tells me, hold on. Now you're asking me this question, I have to answer this. I told you I had seen data for 21 years. I told it works for 6 years. So obviously 21 minus 6 is 15 as far as I know, and I've been repeating it. And now, unfortunately, you have joined in late. I've explained in detail. I've explained in detail as to what happened, who did what research in 1950, and this can be verified. So you also must understand that I did not title it "Sell in May and Go Away." There were three question marks. So we are challenging that. I challenged that data. Sorry, I challenged that adage, and I found out that there are 6 times when there was a drop in the markets, and all 6 times, coincidentally, were the bear markets. That's all. The
It's
answer is there. So I don't
Senex,
want to know whether. Oh, sorry.
the other important piece of this is also that if you look at the average return in the developed markets you're talking about, from May till November, the average return is positive from May to November.
Prashant,
From
Prashant,
November
I
to
think
let me finish. So from November to April, it's a larger positive, but the average return is from May to November is still positive. It's not negative.
Okay, sir. That's a very interesting perspective. But I think as Bipin put it just a bit before
sorry.
he
No.
came in.
Sorry for interrupting.
Guys, I
Sorry.
mean, I just don't misunderstand me. I'm not
No.
challenging the bear argument out here, right?
No, no, no,
I'm
no,
not
no,
Okay, okay,
challenging
no,
okay.
any
no, no.
bear argument.
Prashant, please. I am not saying you are challenging or not challenging. I would love to be challenged. I started off. You again missed that first part where I started off
Fair
saying,
enough, fair enough.
please
So I,
don't
I will,
agree.
I will, I will, I will step. I will not answer any more further questions since I missed the discussion. Thanks.
Yeah. Okay. Fair enough.
Thank
Yeah.
you. Thank you.
Thank you. I did
Let's get to
just for
Mike,
everyone.
please. Mike,
I
Mike
did
wants to
say in the
please.
beginning that please challenge me because I have some data. Obviously, you may have some other data. So if you challenge me on that, then all of us will benefit. There's no point in just listening to me and saying I'm right. I am right to that extent that data is showing me that. Now, interpretation is completely different. Tomorrow morning, the market may open lower and it may close higher, and for the next few days, it may go up. As I mentioned, an example of Lehman Brothers, where after Lehman Brothers, 3 days after that, the market took off to 13% up. 13%. So anything can happen. We have to be prepared for that. That's all is the limited part. Now, I wouldn't want to say whether it is the right way to ask a question. Not, I'm perfectly okay if somebody asks in any manner, so long as data is presented. And
Yeah,
opinions
sir.
could be wrong. Data is not wrong if we have got the right data. That's all. Limited to that.
Yeah,
Yeah.
sir. Let's get to the next question. I think Mike has been waiting. Mike, please go ahead. Are you there, Mike? Okay, seems like he's not there. Next up, BK. Mr. BK, are you there?
Hi, good evening, everyone. Good
Good
evening,
evening.
Vijayji.
Yeah. Good evening, sir.
Sorry, I mistakenly, pressed that button. I was listening to the arguments on the or the discussion. I did not say arguments. Discussion on the bear and the bull definition. But indeed, even I felt since last October. I'm a newbie. Let me be honest with you, with everyone. as a newbie, even I was a bit surprised and taken aback by the relentless buying till last October and the relentless selling of FIIs from there on. Even now, considering I'm very much bearish on the market up till uh, uh, up till this commodity prices cools off a bit, or to be precise, the inflation prices comes down a bit. Because as Vijay sir rightly said, like after a huge rally, humongous rally for almost 8, 9, 11 months, there has to be a consolidation phase, which currently we are in. So, considering all this, all the data parameters which all the panelists told me, along with mentioned, along with Vijay sir, I think bearishness has to be there for at least till November. Once we see the end of the year data on the global front, I don't think so. We are going anywhere. I mean, to be precise. So that's what I want to say. That's it. Thank you very much for giving me this opportunity.
Yeah, thanks, BK. Good insights. Thank you. Next up, Mike.
Yes, good evening, everyone. Good evening, Sarad ji. Good evening, Phoenix sir. Good evening, Abhishek ji.
Good evening, Mike. Good evening. Good evening.
सर, एक चीज का ऑब्जर्वेशन है, मैं ये नहीं बोल रहा हूँ कि मार्केट में मंदी ही होगी या तेजी ही होगी, खाली एक चीज का ऑब्जर्वेशन है, मुझे आप सबके साथ शेयर करना है सर, कि जिस मंथ में 5 ट्यूसडेज होता है, ठीक है, उस मंथ में मार्केट मोस्ट प्रोबेबली डाउन नहीं जाता है और अनएक्सपेक्टेड तेजी होती है। दूसरी एक चीज कि जिस मंथ के एंड में 31 तारीख होती है, उस मंथ में निकल में अनबिलीवेबल बुल रन होता है। ये प्रेजेंट मैंने 20 साल का मेरा ऑब्जर्वेशन है, मैं भी नया ही हूँ, मगर ये मैंने ऑब्जर्व किया है कि जब भी 5 ट्यूसडे होता है, उस मंथ में मंदी होती है, मगर तेजी उससे ज्यादा स्पीड में होती है सर। बस खाली मुझे यही कहना था सर। थैंक यू सो मच टू ऑल ऑफ यू।
It's a very good observation, by the way. जो मार्च में हुई थी ना, मार्च 31st जो एक्सपायरी थी अपनी, that was a very good observation, by the way. Thanks for that.
और सर एक चीज और जैसे नवरात्रि मनाते हैं इंडिया में, ठीक है, तो नवरात्रि में भी क्या है, पहले के जो 5 दिन होते हैं, ठीक है, उसमें कभी भी बहुत लंबी मंदी होती है और आखिरी के 5 दिन में बहुत ही बड़ी तेजी होती है सर। आप ऑब्जर्व कीजिए, पिछले 15-20 साल 25 साल का डेटा देखिए, कभी भी मंदी नहीं होगी सर, कभी भी नहीं होगी। और इस महीने भी हाँ ठीक है, मार्केट का सिनेरियो बहुत वर्स्ट है, डेटा भी बहुत डिसअपॉइंटिंग है, मगर मार्केट अनएक्सपेक्टेड और अनबिलीवेबल चलेगा। जिस साइड पे चलेगा वो अनबिलीवेबल चलेगा सर। बस थैंक यू, यही कहना था सर। थैंक यू टू ऑल ऑफ यू।
बात तो बिल्कुल सही है। I think all we can do as retail investors or whatever we are is just to manage our risks. कि जहाँ पे भी पैसे मिले निकल जाओ, जहाँ पे नहीं मिल रहे वहाँ पे काट लो बस। That's the only thing we can do in our hands. Very good points, by the way, Mike. Thank you very much. Next
Thank you so much, sir. Thank you, sir. Thank you so much, Sainik ji. Thank you, sir.
BK, I think you have to go ahead, please.
One more pattern which I noticed for past, as I said, I'm a newbie for past 3 years rather, not 2.5 years. ये मतलब irrespective of this COVID fall, that was the panic selling which has happened. That's fine. But before that also, this last quarter of every year, that is between January to March, if majority of this result dates and April also, and this continues till April, because this result times, and out of 10 stocks, 9 stocks get into this selling spree. 10 20 10%, 10 to 12% that correction happens. This is what I observed. I might be wrong, if someone can enlighten me. And this also happens with the post quarter 4 results, which gets declared by big companies or the Nifty 50 companies. They also get so. Once the Nifty 50 company is one of the big majors that gets corrected, of course, it also has an effect on the bank Nifty, and in return, it also has that Nifty effect. It is a very, it might be a very novice understanding from my seniors, but would appreciate if someone could throw some light on this. Is my reading or is my understanding correct or not? Vijay
You're
sir?
absolutely right on that. Vijay sir, could take a question.
Uh, sorry, I was having water, so I just missed
I
that
will take
question.
it.
Please,
Uh,
I
can you
think
just repeat it?
CA.
I'll answer.
No, I
Let me
will
just.
take it.
Yeah,
Yes, yes.
yeah, you take it.
Sharad sir. Yeah.
It will all depend on the results, whether they are good or bad. So this quarter, the results are seemingly bad, and next 2 quarters they'll be still bad. So the phenomena that you mentioned will be manifesting itself, but thereafter it all depends on the results. If after 2-3 quarters, if results are forthcoming and good, markets might react positively to the results. So it all depends on the result, my dear.
Noted, sir. But I have also noted. Okay, last year 2021 was an exception. Irrespective of bad results, the markets have awarded with a very good bull rally, which you mentioned that it is an artificial rally which has taken place last year. That is, I mean, in 2021. But if you look at even this year, that ICICI results were good, but it was tanking. At the same time, what I'm thinking from a future perspective per se, right? This might also, these results might also be the that 2020, that lot of this moratorium thing and those things, that uska jo after effects hai, that might also cause this bear run or the consolidation move for the coming months. So back to back, there is a possibility of some bad to neutral results, which we can see that sell off all the consolidation in the coming months or the coming quarters, I would say.
नहीं, फर्स्ट
Will
ऑफ
it
ऑल
will that be
आप
so?
बेयर मार्केट बोलने को क्यों घबराते हो?
नहीं सर, वैसी बात नहीं है. मतलब बेयर मार्केट इज बेयर मार्केट. आई मीन फ्रॉम द बिगिनिंग आई स्टार्टेड विद माय डिस्कशन ऑन अ बेयर मार्केट ओनली.
Okay, so
Yes sir.
on this thing, generally in the markets, whenever a result is announced, whether it's a bull market or a bear market, result आया कि ठोको. That is the formula of trading, because in each season, whether bad or good, ठोकना ही है उसको. Result आया कि ठोको, result आया ठोको. So
Okay.
this is a general phenomena, I think. And as you rightly said, na, the banks with the simmering NPAs and Supreme Court diktat and all that, when it will unravel, वो सब बैंकिंग के रेट सादा हो जाएंगे पैसा.
I was expecting the same last year. मतलब
No, please.
considering
Let me just
2000
put one perspective into this.
2020. Sorry. Okay.
Can I interrupt you
Yeah.
for a second,
Go ahead.
please?
Yeah. Please, Abhishek. Please, Abhishek.
Yeah, so I was getting to the point of the net interest margin. So if you look at Axis Bank or ICICI Bank, everyone on Twitter was saying that the results are very good. It's not re-rate to the valuations that HDFC twins have, and that's what that did not happen, right? That is because of net interest margin. So in spite of your loan interest rates, which are going higher, and the savings rate going lower because of the RBI and the current account deposit also going higher, that is when your net interest margin actually had to go up at this point of time. But in fact, they did not go. They did not do that in spite of the moratorium and all the factors. And if you look at one trend that's been observed in all of the banks' results until now, each of the banks have been showing lesser net NPAs and gross NPAs too. And that is not a factor of your provisioning, and neither is it of that. It's just net interest margins going down.
Okay,
That is why
noted.
all the banks are getting hammered. Axis Bank 7% got hammered. HDFC Twins got hammered very badly.
Abhishek, I just want Srujan is there. Just pull him as a speaker, no? Srujan K.
Yeah, sir.
Or
Yeah, sir. I'll do that.
yeah,
I'll do that.
kindly do that. Yeah, thank
Yeah.
you.
Thank you, everyone. Thanks for
Yeah,
giving
thanks,
me this
BK.
opportunity.
Thanks a lot for this.
Thank
Yeah.
you, Vijay.
Next up, I think Rajesh has been waiting. Please go ahead. Are you there, Rajesh?
Rajesh, are you there? Okay, Srujan.
Yeah,
Well,
hi.
yeah. Okay, Rajesh.
Yeah,
Yeah.
Rajesh, go ahead.
Just wanted to know, is there any expert in our group USD INR trading?
Sir, what did you say?
Any expert in USD INR?
I think we'll have to contact Vipin, sir. So Vipin will be able to.
See, Rajesh, I don't have, I can't call myself an expert. All I can see is it is steadily, the rupee is declining. So if you go by momentum, I think it will be much higher about 6 months down the line than what it is today. So I would say I am bullish dollar, bearish rupee based on whatever I'm seeing on the charts. If that is of any use, that's how it is. Thank you.
आप ऐसा बोलो क्या पूछना है इंडिया यूएसडी है ना
नहीं, मैं यही पूछना चाह रहा था कि बहुत लोगों से एक्सपेक्टेड ये सुनने में आ रहा है कि 80 रुपीज प्राइस एक्सपेक्टेड है, तो जस्ट वांटेड टू क्लैरिफाई, मतलब ऐसा कुछ एक्सपेक्टेशंस लगता है?
Rajesh, from my side, I don't have a target, but I'm only saying it will be worse off 6 months than what it is today. Maybe Sharad Bhai will be able to throw a target. I'm not having any targets.
See, in 2-3 months we'll be seeing 79 per se. See, I will explain you the logic. डॉलर रूपी आज 4% के डिफरेंशियल पे चलता है। अब पता है आपको? हाँ जी
जी।
आप जब बदला करते हो, रोल ओवर करते हो,
राइट,
तो आपको डॉलर का 20 पैसा 30 पैसा देना पड़ता है।
हाँ जी, हाँ जी।
वो है नेचुरल कवर।
राइट।
सो इट इज प्रिज्यूम कि एवरी ईयर 20 पैसा 30 पैसा हुआ तो 3-4% का डेप्रिसिएशन हुआ।
राइट।
So every year rupee will depreciate by 4%. Okay, this is the logic.
Okay.
Now, since 2013-14, अपना रेट 70, 62 ये वो हुआ, मीनिंगफुल डेप्रिसिएशन नहीं हुआ है। तो ये 5 साल का 4% से डेप्रिशिएट आप करते हो तो 20 रुपया होता है। तो आप 65 में 20 रुपया जोड़ो तो 85 रुपया कायदे से आना ही चाहिए, क्योंकि उतना तो आपको कॉस्ट लग गया है भाई साहब। आप एवरी मंथ जो रोल करते हो ना, आप करते हो कि नहीं करते हो?
हाँ, रोल ओवर रहता है एवरी मंथ।
हाँ, तो उसका कॉस्ट हो गया अभी 85 रुपया। तो
हाँ जी।
कायदे से 85 रुपया होना चाहिए, लेकिन आरबीआई बीच बीच में आके बेचता है, लेता है, करता है, कंट्रोल करता है, तो वो रुक जाता है। बट एक टाइम आता है कि वो पूरा टाइम का गैप वो फिल कर देता है।
राइट।
तो मतलब ये ऐसे अंदाजे से बोल रहा हूँ, 85 हुए या 84 हुए या 86 हुए, वो रेट 110% आएगा 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 आएगा। ओके, दूसरा बात है, आप डॉलर येन का भाव क्या है मालूम है आपको?
नहीं, डॉलर येन में नहीं देखा मैंने।
नहीं, फिर भी आप इतना पूछ रहे थे, एक्सपर्ट है कोई डॉलर रुपी का, तो येन का तो आपको मालूम ही होगा।
फ्रैंकली स्पीकिंग सर, येन मैंने मतलब बहुत ज्यादा नोटिस नहीं करता, बट है यस देखा था 125 29 के आसपास।
132 है, और अगर आप खेलते हो ना रूपी, तो पूरा चीज का ध्यान रखो। वो 132 पे है, तो 110 का 132 हो गया, तो अपना कौन सा खेत का मूल्य है इंडियन रूपी? वो तो टुच्चा है। उड़ेगा तो ऐसे उड़ेगा जैसे पानी में कागज की नहीं उड़ती है। So this is artificial. See, basically I'm saying one thing. Our stock market, our currency market, our bond market, our this market, our that market, our blah, blah, all markets are controlled by the government, and which is a very dangerous thing. When and how it will blow up, it's going to take a very heavy toll. And I think in the month of May or June max, now 42 trillion rupees for the two jokers, Ambani and Adani, out of 269 trillion market cap. What nonsense is this? How it is? How are we alive? Why are we not protesting? So coming back to your
आपका वॉइस क्लियर नहीं आ रहा सर।
Yeah, Abhishek, can you find Ronit anywhere? Ronit
Rohit Srivastava?
top trader, yeah. Maybe before that, Shujan can say something.
Yeah.
Sharad bhai, you're not audible at all. Not audible. Shujan, you would like to say something?
Yes, sir. Sell in May and go away. If you see last 5 years of May, 2017, 18, 19, 20, 21, if you see 5 years, there were nothing, market hasn't fallen in the monthly closing. Market even went up and closed in positive. So where this statement is coming, I don't know. So I have to find it out.
No, wait. I think you were not there when I started. I also gave a, once again, I reiterated. I have studied 21 years data. Only in 6 years has there been a sell in May and go away. It is worked out. These 6 years are 2000, 2001, 2002, 2018, 2011, and 2016. So if you observe these 6 years, all of them were bearish years. So obviously from 17 to 21, they were not bearish years. Similarly, 2003, 4, 7, 9 were not bearish years. So what I could draw from this observation was that only when there is a bearish year, there is a drop between May and November, May and October end. So on a bullish year, it is not there. So the question is, are we in a bear market or a bearish year, or are we in a bull market with a correction? Most people I know of are talking of it being a bull market with a correction which we are seeing now. So if that is so, from tomorrow you should be buying heavily. However, if you believe that it is not that 15-year pattern which we are seeing, but we are in a bearish market, then we should be selling from tomorrow. So the choice is left to the person who is being presented this data with. What I am doing, I am clear, but it is not necessary that everybody believes whatever I am doing. This is the data. So the question has been answered in the manner 15 years of bull market was there. So obviously, you should be buying in May, buying heavily in May, because you'll make great money by Deepavali. If you believe that no, we are in those 6 years when it was a bearish market, then you should be not buying. Now the choice is left to whoever wants to trade whichever way they want. This is the data available.
So I meant to say is we are in a bullish market only, but we are in a bearish correction, sir. So
yeah, that is the point. Correct. If that is so, then you should buy from tomorrow.
Whatever you are saying is absolutely true, sir. So from November first week or November second week, you will have a rally where the base will hit badly. From November first week, I'm telling you 2022 November first week, where the base will have a bad hit. So they will take a bad experience from November to December, sir. So this I can surely assure you. So we are in a bullish market only, but bearish correction. So this is what I wanted to say.
Correct. Yes, Sujan. That's what I'm saying. So you are on the other camp. See, I am on the camp which I am thinking it's a bear market, and we are a part of one part of the bear market is over. So therefore, I am being very cautious from tomorrow. I am not buying. If you are thinking, as you just now mentioned, that it is only a correction, a bearish correction in a bull market, then if I was in your camp, I would have bought heavily from tomorrow, because I would have made money, hopefully made money, based on probability that by November 1st, I would be sitting on higher prices than what we are today. So there are two views. Obviously, tomorrow somebody will buy, somebody will sell. Conviction for me is sell. Conviction for you should be buy.
No, I am not saying that I will be buy, sir. I will also will buy. I will wait for 15,500. 15,500 is ultimately target.
That's okay. No. What I'm not saying you. You means you personally.
Sorry.
I'm saying somebody who's got an opinion like yours. Let me put it that way.
Sorry. Okay. So this is what I meant by my view also, sir. So we may see 15,500 market and Dow Jones 32,000. So from there we may see some reversal towards the. I'm expecting an all-time new high from the rally from November first week. Again, the rally will start. So from November first week, I'm expecting a good up move in the market. So this is what my view is about, sir. Thank you.
Okay, thank you. Let me get Nick the vagabond. Okay, I think he's not online. Let's get Milind.
Hi, good evening, all. First of all, thank you very much for organizing this space. So, I will not be, speaking about whether the market is bearish or bullish. I trade specific to the sectors only. Last quarter, I traded in sugar sector only and got good profits from that. So, I will be asking you on sector specific. So, in the next 1 or 2 months, which sector you see as a bullish sector, which where we can say we can invest and earn some good amount of profits?
Yeah, Milind, thanks for the question. So I am not a sectoral guy. By and large, I feel overall the market should be drifting downwards. But I am looking at specific stocks. I have put those stocks in my ugly duckling portfolio on my Twitter timeline. And personally, I hold ITC and S Bank, and I'm hoping that they'll do well in the next few months, or at least they'll lose less in the next few months. But overall, I feel the market will drag down most sectors, but certain stocks will certainly outperform. Right now, my stocks are outperforming are sitting in the ugly duckling. 2 of them are in my portfolio, only 2, which ITC and S Bank. Yeah. Can we proceed further, Abhishek? Because it's already getting 12 o'clock. So, trendonomics.
Maybe let's go to trendonomics, please go ahead.
Thank you, Sainik sir, for allowing me to speak. So, I would first answer the question asked by the gentleman. Yes, if you are asking the sector, are we looking at the sugar sector to buy in the dip? Are we looking at the fertilizer sector to buy in the dip? Or maybe some chemical stock? Okay, and if you ask me whether it's sell in May and go away, I'm selling in May, but I'm not looking to go away. I'm of the view that probably by the end of the May, whatever the sell-off has to happen, that may happen, and I will look to buy at the end of the May. What level it would be, I don't know, whether 15,500, 15,000, I don't know that level right now. But definitely, whatever level that comes, I will review. And if that time I see that yes, it's a good buying opportunity, I will definitely buy. That is my current view. I keep changing my view based on the price patterns. I don't stick to one view for a long time, because earlier I had a view that we should be falling to 14,000, 13,000 levels. But for time being, I have kept that view aside. And whatever, at the end of the May, if we do get whatever the patterns I'm looking at, then I will be buying. And I will review. I will review in June, July, August whether market comes back to the all-time highs. If it doesn't happen, then definitely I would be skeptical again.
Okay, thank you,
Yeah,
Harsh.
thanks, thanks, Economics.
Next up,
Very
Vidyasagar.
good. Subhadeep Nandi, Dada, where are you? Okay.
Okay, if you're back, Nandi, sir, you can go ahead.
Yeah,
Vidyasagar.
can you hear me now?
Yeah. Yes.
Yeah.
Fine. So I was just listening to this discussion. I believe I will be the odd man out here because people are talking about June, July, November, and all such things. Now, let me be frank, I can't see more than maybe 10, 15 days. I mean, after that, my prediction goes away. I don't try to predict also. I'm extremely short term guy. So here, as of now, the market looks pretty shaky and it's probably headed down. And again, I'm not a targeting guy that I will tell you that this will go down here, that will go up here. So as the trend is down, obviously I'll be short. When it turns, then we'll look at it. But as of now, I'm not seeing Nifty or Bank Nifty going anywhere upwards. I have two very specific figures which I also tweeted. 17,400 on Nifty and 37,050 on Bank Nifty, both on futures rates. So unless for two consecutive days we get closing above these levels, I will not play bullish on the market. Unless this happens, I will be looking to sell on breakdowns or probably sell on rise. So this is the very basic thesis I'm working on right now, nothing else. Thank you.
Very well rounded, Nandi, sir. Very well rounded. Thank you. Vidyasagar, please go ahead.
Thank you, Abhishek. Thank you so much. Good evening to everyone. So, I've just started on the journey of investing. I don't have any insights per se. I have a couple of questions actually. So, I've invested in the likes of HL and BEL very recently. So, like I've entered at in BEL, I entered at about 243, and in HL, it was close to the 52-week high. I entered at about 1650. So, how do you think the defense stocks will perform in the next 3 to 5 years? Like, is because of the Russia-Ukraine crisis as well? Do you think the defense spending might go up and the domestic defense companies might benefit from that? What are your thoughts on that? So that's what I wanted to ask. That was my first question. And my second question is related to the IT sector. So I've invested in certain mutual fund, which is a sectoral fund. So which is heavily betting on the IT stocks, IT major, Infosys, TCS, all these stocks. How do you see them as well in the next 3 to 5 years? So these are my two questions.
Yeah, Vidya, thank you for asking these questions. Generally, I didn't want to talk about stocks. Anyway, if you take sectors, I have clearly mentioned that IT, I am certainly very bearish on the sector because everybody seems to be hiding there. You don't have an investment strategy where you hide. Either you buy or you sell. You can't say I'm hiding in something. That means you have no conviction. So a lot of money is scared money is going into sector, stocks in that sector. And when scared money goes, the scared money never makes money. This is my experience. So I am certainly very negative on the sector. Of course, certain stocks may do well, and certain stocks may rebound after falling, say, 20-30% from here or whatever. Some bottoms may be made on that. But certainly, it is not a bottom for me on the IT sector. Defense sector, yes, it's logical to expect, what shall I say, the sector to do well because of the war. But as far as data goes, there is no great allocation for defense, even in this budget or previous budget, in terms of percentage allocation. So I do not know from where this defense sector will do really well, but sentimentally it may do well for some time. So that's a limited point. Thanks, Vidya, again for asking that question.
Thank
Maybe.
I would like to add one point over here. Since I'm tracking HAL, so 1490 is the level. If it goes below, then you may exit. Otherwise, you may decide to hold, depending upon how long you want to hold.
Yeah, thanks, Trendonomics. I would just try to keep this stocks a little bit away from this discussion, because I'd mentioned specifically that we will not talk stocks, because what happens is then, there'll be number of requests and it will go on and on. Let's talk concepts. Let's talk sectors maybe, but I would prefer more on the Nifty, Bank Nifty, and general direction and sentiment and fund flows, that kind of thing. Slightly macro is what I was thinking. Thanks anyway, Trendonomics, for that response. Thank
sir,
you.
may I take your leave?
Yeah. Thank you, sir.
Really
Thank you for being a part of it and
Thank you.
contributing
Thank you very much.
significantly. Thank you very much.
Thank you.
Yeah. So if anybody else wants to take leave, also
Next
kindly
up,
do
let's
that,
take,
because I'm also
Mr.
tempted to take leave after 12:30. So just let's try to
I know. Let's just
accelerate.
wind up another 15 minutes more, then we'll wind up.
Yeah.
Can I ask a question?
Next up, Mr. Confused. Yeah, please go ahead.
या एक्चुअली देखिए अभी जैसे निफ्टी जो है अराउंड 7100 लेवल पर है. मैं एक बहुत ऐसा थोड़ा बेसिक टाइप का क्वेश्चन है मेरा. मैं ऑप्शन सेलिंग करता हूँ 17,100. हाँ, तो जैसे मान लो मेरे को ऑप्शन सेल करना है अभी करंट लेवल से 500 पॉइंट नीचे का या अभी करंट लेवल से 500 पॉइंट ऊपर का, तो उसमें जो मार्जिन मनी रिक्वायर्ड रहता है उसमें काफी डिफरेंस होता है. जैसे कि मेरे को अगर करीब 16,600 का पुट सेल करना है तो मार्जिन मनी करीब मेरे को 18,000 चाहिए होता है पर लॉट. लेकिन अगर ऊपर का मेरे को 17,600 का अगर सेल करना है तो मार्जिन मनी रिक्वायर्ड रहता है अराउंड 60-70,000 80,000. तो ये ऐसा डिफरेंस क्यों होता है? मेरे को थोड़ा अगर कोई समझा सके तो प्लीज थोड़ा. थैंक.
I think Nandi sir can do this question.
Dada,
I did not understand this question actually.
So he's saying there's a lot of difference between what happens when you sell a put, which is 500 points lower, as vis-a-vis when you sell a call, which is 500 points higher.
Theoretically should not happen. I cannot answer because I'm not primarily a seller, so I have not faced this.
Nice, sir.
I'm not a naked seller. I understand.
See, I've got account in Zerodha, and for the I have observed that if I want to sell a put of 16,600, the margin money required will be around 17,000-18,000
No,
per
I
lot.
don't. So I don't think so. This can't
How
be.
it will be?
It's not
How it
possible.
will be? आपका कुछ गलती होता है. 17,000 में होता है क्या कभी काम?
नहीं 16,600 का पुट आप बेचेंगे तो 16,000 का मार्जिन नहीं हो सकता.
या कोई पुट खरीदा ना हो.
सर पुट सेल.
अरे अगर आप पुट सेल करोगे कम से कम 2 लाख रुपया मार्जिन लगेगा, आकि 1 लाख रुपया लगेगा.
करेक्ट, अराउंड 1.5 लाख इफ आई एम.
या वो आपका वो कोई गलत फहमी है पैसा. आप दोबारा चेक कीजिएगा.
Correct.
Please check if you have any hedge positions. If you have any futures, something. If you have a future short, then maybe you might be able to get that option margin.
Well, this question doesn't merit an answer.
चलिए सर, मैं चेक करता हूँ.
Okay, Kumar. I'm much confused. Okay, let's see. Maybe we can answer in on DM or something like that. Yeah. Thanks, Mr. Confused. Thank you.
Yeah. Next, Dr. Lakshman is there. Dr. Laksh Chaudhary. And hello, I think Himani is there. One of you go ahead, please. Yeah, go ahead.
Yeah, hello. I do agree with Mr. Confused. I also have seen such variation in put and call selling. So he's right, actually.
Not exactly. I just checked. Your total margin, if you sell 16,600 put, is 81,000. Your span is 65. The exposure is 17,000. I think you guys are looking just at the exposure margin and not at the span.
सर जैसे जीरोधा में जैसे अपन जो मार्जिन शो करता है,
मैं जीरोधा में ही देख रहा हूँ. मैं जीरोधा का मार्जिन कैलकुलेटर में ही देख रहा हूँ आपके साथ बात करते करते. And similarly, if I sell, go to 17,600 call, and if I sell that, your margin is 1 lakh. Your span is same 67, your exposure is 34. Obviously ये थोड़ा ऊपर नीचे हो रहा है क्योंकि 17,100 से मैं 16,600 का बेच रहा हूँ तो 500 पॉइंट दूर है, 17,600 का बेच रहा हूँ तो 500 पॉइंट दूर है. 85 to 1 lakh is your margin. It's not 17,000. You can't sell a naked option with 17,000 margin. Not possible.
Yeah, sir. I think you're right, Nandi, sir. You're absolutely right.
No, I'm just checking on the zero the margin calculator.
नहीं पण it's logical ना भाई साहब. सुवालदीप भाई, it is logical ना. क्या 17,000 में कोई बेचने देगा क्या? पागल है क्या?
नहीं लॉजिकल मतलब इतना कम मार्जिन में कोई बेच नहीं सकता है. ये पॉसिबल नहीं है.
सही बात है, सही बात है. Next, let's go to,
okay, doctor, we will take it offline maybe. Aradhana, I think is.
Yeah. I think Himani is there. Then we'll go to Aradhana. Are you there?
Himani, are you there?
Okay, let's go to Aradhana.
Aradhana, would you like to say something?
Her mic is actually muted. She probably forgot to switch on her mic.
Yeah, I know, Dada. Anyway, it is good that you came on to Spaces. Dada, nice to hear your voice. We only been interacting.
I rarely come on actually.
Good. Happy that you're here. Last call, Aradhana and Himani.
Let's get Karan then. Karan, please, if you're there.
Yeah, I hold a significant farmer shares. Like, when do you think will be a bounce in the sector? It's going more and more into red. Like 20-30% losses. What should I do? When should I average?
I don't know. When you say pharma, I don't know. Because see, in my ugly duckling portfolio, there are 4 pharma stocks. I'm happy to hold them. So it depends, no, on stocks. There are many good stocks, many not so good stocks in pharma. So it's very difficult to give a answer just like that. Say for in tech, I'm bearish, but in pharma, I'm not bearish as a sector. But certain stocks like Lore, Suven, and all that are part of my the portfolio of ugly ducklings. So I would hold and buy those kind of stocks even if they are down. I may not buy a Biocon, but I may buy a Divis. So it depends on what pharma stocks you're talking of. And since we are not talking of particular stocks, you'll have to excuse us, Karan, on this.
Yeah, I get it. But
Please,
the whole sector, except like, no, what I wanted to say is like the whole sector is going down and only more down, except like 3 or 4 stocks. Like even if the like the valuations are like single digit P, like our yeah. When can we see a bounce? Because this is like
can I just give a view out here?
Yes,
and it is not on pharma sector as a whole, because one part of your question caught my attention. You said when can you average, right?
Yeah.
Why should you average actually?
I mean, I feel it's a good growth company, but sometimes margins fall because of market pressure or whatever.
See, I will tell you something. I'm not an investor, but this might be totally contrary to what you think about investing. Let's say you go to a market and there's this guy who's selling potatoes, right? He tells you, sir, potatoes are 10 rupees a kilo. Please buy. You buy 2 kgs, come home, you see that, right, 50% of them are actually rotten. Fair enough. Next day you go to the market once again and the guy tells you, same bunch of potatoes, sir, this is $5. Will you buy from him? No. The point I'm trying to make is if you have bought something, it is down 20-30%. It doesn't matter what hypothesis you hold, how the company is. The market is not supporting your hypothesis or your thesis that this sector is bullish. You might think that the sector is bullish, but the market is not supporting it. So if you buy 30% below, you think there's a valuation, it goes 20% down more. So you cannot predict that, right? So your initial idea that pharma is good, which you're saying, is wrong. Price is saying it is wrong. So the basic theory is you never average a loser. That's the most basic theory, whether in trading, whether in investing. So if you want to buy more, I will suggest let the stock first go above your purchase price, then think of buying. And secondarily, as an investor, I don't know whether you keep a stop loss. It could be a big stop loss, could be something, but that is also one thing I think you should maintain.
But
Otherwise, if you get
that's like a contrarian view, right? No stop loss, but don't average also. So what's the use? Like then we should just not even like do something else, right?
I am asking
No,
you
but
should have
you
a
do
stop
not
loss.
know.
Like we don't average, but no stop loss. That's like two different things, right?
No,
No,
let
no,
me
no.
give you
What
a
I'm
hint
trying to
first.
No,
say is
he's
you
saying
should
have a stop loss.
have a stop loss. That's what I'm saying. I'm not asking you don't have a stop loss. It can be a big stop loss, but there should be a point where you decide that okay, my hypothesis is not working. This is why I should get out.
Like I'll just take a very general example. Like Bajaj Finance today, it's a very known stock. So it might go to 5K tomorrow. Should I just sell because it's the 20% drawdown, or should I average more? What do you think about that?
You should keep a stop loss when you're entering the stock. At that
I mean,
point,
but
is
we
know
know
where you
Bajaj
should
Finance
retreat.
won't go away anywhere, right? Like, why should I sell for a loss or something? It's just
I
like
mean,
a
I mean,
liquidity.
You do not know
It will
for
just
sure.
if
become
you
a
wait,
liquidity.
your hypothesis we know, right? Okay, everybody knew Himachal futuristic at 2000 rupees in 2000. I mean, everybody
But
knew.
sorry, this is not like a Himachal, like, sorry,
Yeah,
whatever.
I
actually,
Bajaj
think
this
Finance is a very
you
big
discussion
never,
one.
To
is
decide.
you
this
never know.
discussion is pointless here.
No, I'm
It's
Exactly.
just
Let's
serving
let's
no
asking. Ki,
digress.
no,
purpose.
I'm
Let's
just
not get
asking.
get
Ki,
there, please.
will we like what is the
No, you
like when we?
can't ask like this. Okay,
I
why
can't ask
Bajaj
like this.
Auto,
How can I
Bajaj
ask?
Finance?
So
Bajaj
you,
Finance will go down
Yeah.
to 1500.
so you will not.
That's my view.
You will sell at loss and go away from Bajaj Finance at 1500.
No, who
Arey,
we are
what
talking
Wait,
about?
wait,
you will
wait,
go
wait, wait,
away
wait.
and
Excuse
this?
me. No
What
need to get
nonsense is
aggressive.
this?
Not need
No,
to
no, no.
get
Wait.
aggressive. What my point
Let's try
is,
to listen.
relax. My
Yeah.
point is, when you buy a stock, even when you're investing, at that point you should have a price point where you decide that this is a failure and I need to get out. Unless you have that, it becomes kind of a very subjective view where it can go down, and it's a logic that this stock cannot go down because it is known to everybody doesn't hold. Even if you see Amazon, I mean, you cannot compare Amazon and Bajaj Finance, right? It's a much bigger company. Bezos is one of the richest people in the world. It is down 33%. So where a stock will go because it is well known is a very illogical scenario according to me. So just uh, take a price point where you believe that your hypothesis no longer holds and get out there. And never average a loser. This is what I follow. You may or may not follow.
Okay, thanks.
Yeah,
Thank you.
Nandita,
Thank
that
you.
Yeah.
was a good answer.
Yeah.
Uh,
Abhishek,
next,
kindly pull Anish. He wanted to speak something. I'm
Anish
not able
Teli.
to.
Yes.
Yeah.
I'm gonna
Yeah.
restart him.
Yeah.
And let's just take Vivek's question next. I think.
Thanks for your answers.
Yeah.
Thanks,
Thank you, sir.
sir.
Thank you, sir.
Vivek, you can go.
Yes. Hi, everyone. See, my question is the topic that we have put is sell in May and go away, because there has been a very, if you look at the past, there have been instances where May has been very volatile, where we have seen falls of 13%, 15% as well. Now, the similar kind of situation is bringing up in May again because of inflation and all other factors. My question is, what is the general consensus that where the inflation is going to pick out, and if and at all if peaks out, what is the kind of valuation hit that our markets as well as the global markets are going to have? Based on that, is there any is there any way on which, see, we all trade levels that if this particular level breaks then we'll go there, that I know, but from a fundamental point of view and coinciding it with the technicals, can we have a view about what kind of impact inflation is going to have on our markets? Like, you have to have some understanding of the earnings as well. Yeah.
Yeah, thanks, Vivek. I'll answer first, and maybe others will also chip in. See, this topic, it seems to have become a little bit more of discussion point other than why the intention. The intention was to start a discussion on that and then continue for 4, 5 other points, which people seem to have missed by and large because they didn't come at that point of time. I mean, in the beginning when I talked about it in detail. So it was a question mark. Sell in, move away, and go away is a question mark. It is not a definitive statement. So anything can happen. in any May to October end. And we delved deeper and found out that there were some instances, and they coincided with the bear market in that particular year. Now, moving out from there about inflation. See, my personal opinion is inflation is understated in the numbers, and sooner or later we'll have to catch up with the reality. And we do not know at this point of time where the inflation will end. So, ideally, I would like to look at it on a regular basis. It could be a date basis, or a week basis, or a fortnight basis, or a month basis, to see where these macro parameters are going. If you're an investor, if you're a trader like Dada, then it's a completely different thing. He will look at COI, he'll look at various other technical indicators, and then decide. If you look at an investor, inflation is generally bad for the equity markets. Risk it is bad for risk. So as of now, it is only on the upward path. So we cannot, at this point of time, define a number for inflation saying it will go there only. We do not know, because nobody expected inflation to actually go up from where it was last year. For 10, 12 years, we had deflation. Now we are staring at inflation, and central bankers are doing nothing to take care of inflation. So it can go into very high inflation. Some countries may have hyperinflation. We don't know that. So when we are having such uncertainty, a prudent investor would first not buy anymore, wait, and then see where it is going. And then if there is a turnaround, then he would enter the market. Now, you may not be able to catch the bottom if you follow this strategy, but certainly you will lose less money if you simply blindly go and say it will peak out at 7%. Like RBI comes up with saying something like it will go there to 7% or 7.5%. If you believe RBI or somebody, that may not be very prudent, because they don't have a good track record. Sorry to say, but that is what it is. So if you want to manage your money safely, I would say review it on a regular basis, and then you yourself will know whether the inflation has bottomed out. Right now, it is looking on an upward path, and it looks like it will go on for a very long time to come. Thank you.
I will just add few pointers here. See, when I'm when I'm factoring in inflation in my calculations, I can go back in history and see whenever there has been cases of very high inflation, like during the oil embargo during 73, I guess 1973 or something. At that point of time, when the inflation shot up like anything in US markets fell by 45%. It was only because of that inflation gain. Again, in 2013, also in our country, also we saw that when the inflation peaked out at around 11 to 12%, then also our markets tanked about 35% or 25 to 30%, something like that. So my question was from that perspective. See, we have very good domestic flows, but if inflation keeps on rising like this, then at some point, so right now our trailing price to earnings may be about 23, 24 times. It was about 29 times a few months back, but after earnings as well as because of the corrections, we are probably trailing about 22 to 23 times. Now, if inflation strikes and our valuations take a knock, what is the general perception that if we come down to, let's say, 18 times of trailing, whether it's if you are saying that you just follow the technicals and as it rises, I know. I mean, I'm a trader. I'm as well an investor as well, but probably most of my money is parked in trading. Right. So I always follow the technicals, and obviously at that point of time, I'll be able to decide. But from a fundamental point of view, where an investor will feel that, okay, there's some margin of safety at 18 times price to earnings on a trailing basis, it is a good market to invest. Markets may fall from there as well, but there will be very little scope for further fall. You get my point?
Okay, I got your point, Vivek. Let me just quickly rebut there. You are right. We should have some, let's say, range. For me, the range is 15. Incidentally, in 2008, the markets went to 10 P-ish, trailing. So if you are prepared to not worry when it goes to 10, so at 15 is good, because 15 is generally the average which we have seen for a long time. Averages mean nothing, But still, I would be happy to buy the Nifty or stocks at something like 15, somewhere between 14 to 16, and which I think they will come there. I
2008,
think.
actually, we bottomed out somewhere at 8p. Anyway.
No, I know, I know that. I know, Dada, it came below 10, but let's simply say 10 for time being.
Yeah, and actually,
Yeah,
when we
but
are
that
saying
was a very
22,
different scenario. I mean, yeah, I get your point. 14, 15 times price to earnings will be actually very lucrative given current
Yeah, so
scenario.
let's keep it there
yeah,
because
Vivek,
let's
See,
as of now we are not there anyway.
if we
So
see
that's why
20,
I said we'll put a trailing stop loss on that, saying that if it comes to 14, we'll start buying, or if it goes down further, then if you put a trailing stop loss at 15, we'll buy if it's at 14. At 14, we'll buy it if it's 13, and it goes on. And if we reach 2008 levels, we'll buy it at 10 because our trailing stop loss will hit once it reverses.
I think now we
So
need to
fine.
keep a trailing stop loss on our
Okay,
time
cool.
limit also.
Yeah, I think we should keep it stop
yeah,
loss.
I'll
Yeah,
just,
Anish.
Thank you.
Yeah.
I was just going to answer Vivek, with a metric he can use. So Vivek, what you can do is just look at earnings yield and look at the risk-free rate at any point in time. That's called the earnings yield and bond yield gap. And as soon as that gap today at one, let's say we are at 23 times earnings, right, or 20 times earnings. So your earnings yield becomes around 5%, 5-6%, and your risk-free rate is around 7.5%. Anytime your earning yield starts going above the risk-free rate, it becomes fairly attractive for that anyone to start buying. But you can't buy at one point in time. There is no single level at which somebody can say that okay, start buying at this level, because like George Soros, is my favorite quote is that markets are not equilibrium bound; they are bubble prone. Markets are never at equilibrium. They
Yeah,
will always just
goes to an
swing between
extreme.
here and here. They will swing from here to there. So don't look for precise levels. Look for approximation. Look for approximate metrics, and this earnings yield and risk-free rate is a decent metric to sort of consider.
Yeah, this actually is a good metric that we also follow. Thank you very much. Thank you for your
Yeah,
answers.
thanks, Vivek. Thanks, Anish. Last two, no? Jay and Rajni. Rajin Jay. I think we'll close with that. We already crossed 12 o'clock.
Hello, sir. My question is actually, I am a technical analysis trader. Okay, I don't use fundamentals with it. I have experience of around 2.5 years, and I still haven't experienced the market that much. But the thing is, now I think I should add fundamentals knowledge into it, and I don't know why. I think it's boring. Like technical. Okay, the thing is, technical analysis is more working for me rather than fundamentals, and I think it's more too like a boring side for me.
Yeah, say money making should never be. I mean, money making is not boring. It's a tough thing. So you either do fundamentals or do technicals or do a combination. Dada is an expert there in technicals. Maybe he'll give in a few hints. I think it is left to a person's choice of what he wants to do before he invests slash trades. Obviously, for trading, technical analysis helps more than fundamentals. For investing, it's the other way around.
Uh,
So,
ac- uh,
so I think you'll have to choose your poison, as they say. Yeah.
Yeah,
Actually,
just let me ask you, what are you in the markets for? Like, what is your
uh,
purpose to come to markets?
to make money.
So does it matter whether it's boring or not boring, or like
No, not like that. Not like that. Actually, you know what?
you don't find it intellectually stimulating? Is that what you're saying?
No, yeah. I have read market results. Okay, so more of there are many traders who actually combine fundamentals and technicals.
Yeah.
So I thought that this might be a good path. Like actually, I am a very good technical analysis trader, but I still think that I should learn fundamentals. Although my purpose is to make money, and I'm making it. Okay, that's not the problem. But I'm actually thinking why I should learn that as well.
No, you must learn. And more important is you should also learn psychology. Because, in my
Yeah,
opinion, psychology is the most important thing for being in the market, whether you're a fundamental investor or a technical investor. Everything
yeah.
else follows from there. Everything else follows from. That's my personal experience.
Actually, that was my concern before, around 2 years ago. But then not ago that before. But then now I'm okay with that. I read many books. I'm sharpened my psychology, and I'm a good profitable trader right now. But the thing is that fundamental and technical analysis thing are like disputing in my head. So that was my concern.
You have to take a 360-degree view rather than just one-sided, you know. Finally, you want to make money, as Anish says,
Yes.
and you agree. If you want to make money, then you have to choose what is good for you
Yeah,
and
if you're
develop
looking,
on that.
yeah,
That's
if you're
what.
looking for a framework, look at CanSlim by William O'Neill. That's a good framework. Study that. That will give you a structured way to sort of combine fundamentals. So one of the most famous guys who's worked with George Soros, Stan Druckenmiller, he combines technicals and fundamentals. So you have to find your own, like Vijay said, you have to find your own path in the market. So look at CanSlim. That may sort of be a starting point for you. You don't have to follow it, but just be a starting point.
Yeah, Rajin, thanks Anish again. Thanks Jay also for asking that question. Rajin, last word to you.
Hello, am I audible?
Yeah, you are loud and clear.
I just have one single question. That as of now, what's the inflation status? Like अभी तक जो रिजर्व बैंक का जो रेट है इंटरेस्ट रेट है still not increasing. अभी तक बढ़ा है. What's the logic behind that?
Yeah, the logic is simple that government borrowing calendar is huge, so they're trying to defer as much as possible. So that probably is the logic. I can't otherwise understand what other logic is there. Because what is inflation anyway? Is it 6% of the CPI, which the CPI shows, or is it 14% as the WPI says, shows? So I think the difference is huge, and I think probably it is 14 is probably the closer for CPI, and WPI also could be at 14. So the logic is simple. As I said, it is probably because of the government borrowing. Other than that, I can't think of any other logic. But sometimes there is no logic. Mostly things work on illogic. In India, at least. Now, why India? Everywhere. Why blame only RBI? Everybody is working on no logic whatsoever most of the time. So this is one such silly season, as we call it. Yeah. So I think I've answered your question, I suspect, to the best of my abilities. I think we need to close here. May I thank every one of the participants who came in, who gave in a lot of interesting suggestions. Dada, it's very wonderful to see you. Anish, as usual, you have been a bulwark of, a different kind of explanation, which even I can't think of. Sharad Bhai, always being cut and dried. Sometimes it seems harsh, but I think that is not to be taken so, because he's a man with clean heart. Who else is there? Everyone else who came here, who asked questions and really enlightened all of us. Thank you once again, and may you have a profitable day, week, year going forward. Thank you, thank you, thank you. Good night.